Harry Markowitz passed away, and the news of it was just released late yesterday. The song should be dying down just about now. Yeah, don't want that music too loud here, especially when we're doing this. Yeah. This is the original quantitative trader. The things that Markowitz did in the 50s effectively set the rest of the course for people to start looking at financial engineering, quantitative trading. And he's done a lot over his whole career. So if you want, you can read the New York Times article on it. Every single person on Twitter is talking about it. You can just see everyone's talking about Harry Markowitz here and that New York Times article. And if you're not familiar, he's the guy who came up with modern portfolio theory. This thing here. If you're not familiar with the efficient frontier, that's what this is a chart of. Yeah, very, very sad day for the financial world. Oh yeah, and then there's this tweet here, talking about a very, very famous interaction that Markowitz had with Milton Friedman. Markowitz had to defend his dissertation to get his PhD. And Friedman was saying, you know, your dissertation, what you're doing it on, it's so novel. It's not even economics. We don't think we can give you an economics, dissertation if, we can't give you your PhD because this is so novel. We don't even know if this is actually economics or not. He leaves the room and he's like sweating, and then he's freaking the hell out, and then he comes walking back out and says, it's all right. Nice to have you, Dr. Markowitz. It's a nice little story of two titans in the financial space. If you want, you can go ahead and just read the whole freaking Wikipedia if you want. CAIC is a big, big, big thing. You know what? I've been actually following, I understand, like, this is, most of his work has been on modern portfolio theory, this thing right here. Oh, they don't have any graphs, they just have all the formulas. Oh, there's the graph. Yeah. So this is modern portfolio theory. So his whole thing was figuring out which portfolio with a certain amount of risk and a certain amount of return, which one gives you the most return per unit of risk. And this little red dot, that is the portfolio you want to pick. So if you do all this math here, right, then you'll be able to do exactly that. There's actually a few videos, a few good videos on YouTube talking about how to do this in Python. All right. Nice to see you, Cop. Nice to see you, James. Milos. Nice to see you guys all in here. Man, oh man. Yeah. There was a fairly new book that came. Let's see if I can get the name of it. But there's a few things over, well, since 2019, when I started seriously getting into trade research and reading outlooks. I started reading some more of Markowitz's. You know, Markowitz he died at 95, but he was still doing stuff. He was still at working pretty much up until he died, up until he was hospitalized at least. Let's see. So the book I'm talking about is called In Pursuit of the Perfect Portfolio. And when that book came out, I was really happy to read that. Harry Markowitz made a lot of contributions to that particular book. Let's see here. Yeah, this one right here. Yeah. I got this as soon as I learned about this book, I got it. But I think it was relatively new when it when I found it when it first came out. Yeah, published 2021. Yeah. So this is I got it right away. I didn't get a hardcover. I got an ebook. Another book I've been reading that has Markowitz in it is this one, The Quants. Yeah, is this for me, Markowitz has been a big influence. Even to a guy my age, super young, getting into it all, you know. But you know, who who hasn't been touched in the world of finance by Markowitz? Like it's the things that he's done to for building portfolios. I mean, I don't know if you guys know, but a big part of being a quantitative trader is you create a bunch of strategic alphas. So that means you create like a trading strategy that does well. You make 5, 6, 10, 20, 30 alpha trades, and you put all those strategies together into a single portfolio. And that way you've diversified all of your strategies quantitatively. And a lot of quants still use modern portfolio theory to figure out which combination of all of their alphas they should use to figure out the most optimal portfolio for the amount of risk that they want to put into each strategy. So much work has been based off of the things that Markowitz has made, and yeah, there's a full-on biography here from the Nobel Prize Foundation because he got a Nobel Prize for his work with modern portfolio theory. This is kind of funny because I watch Razor Fist. At first, my reading material consisted of comic books and adventure magazines such as The Shadow. And if you guys aren't familiar with who The Shadow is, he kind of was he was a superhero. Not really. He's kind of like a vigilante. He was Batman before Batman was a thing. Yeah, this was. And then I read some of this today. I read all of this New York Times article, and I read some of this biography, and yeah, life's short, but what for the things that Markowitz contributed to finance, I do not think he will be forgotten. Nope, nope, not at all. Uh, I did look around if I could find maybe some words of wisdom from Markowitz, some investing wisdom that he's talked about, because Markowitz did lots and lots and lots of interviews with a bunch of different groups. And here he has a couple. So he was asked, what is the most important lesson of investing? And you would think, when you're asking someone as important to the field of finance as Markowitz this sort of question, you'd want to be listening. So he says Wall Street exaggerates everything. And that's why diversification is important. It reduces the risk. That's it. I mean, it's really as simple as that. That was Markowitz's thing, quantifying the benefits of diversification. But I think more importantly, he's succeeded, right, by his 13 grandchildren. He has quite a big family. If I can find the section, 13 grandchildren and more than a dozen great grandchildren. So he had a very accomplished, successful life, became a Nobel laureate, helped build out many, many businesses successfully, made a lot of money, had many kids, and hopefully he's had great relationships with his kids and his grandchildren and his wives, managing those relationships. But he's had a very full life. And obviously he was a very good man, especially when you look at all the people who he touched. In fact, a lot of the people who I follow closely in the trading quant space, they are part of a group called probabilitymanagement.org. And I just found out today that he was a co-founder of probability management of the organization. And man, this guy had his hands in so much throughout his life. Yeah, it's a very sad day, but at least I think he had a very, very full life. So, with that all said and done, I'll be thinking about him for the next few days while I go over more stuff from these books and whatnot. We still got to do some trading stuff. There's still a show here, but rest in peace, Mr. Markowitz. So let me go ahead real quick, get ourselves ready. There is one more thing. I did get one outlook from Wells Fargo, actually, talking about, and if you'll mind the wall of text here, student loan debt. So now we're going from Markowitz to student loan debt, but so the rundown on this is that there was a moratorium on student loan debt from COVID in the United States. If I could real quick scroll up here. Where is it? Yeah, so here's the primary problem. Those payments on student loan debts in the United States, they're going to resume in August. When those payments resume, personal interest payments will rise and certain debt-strapped households will be affected. And Wells Fargo is saying, we don't expect this to impact the U.S. consumers and how much they spend, but it will have some effect. Despite student loan debt having grown disproportionately, The majority of households with outstanding student loans do not owe enormous amounts of them. So maybe those are some famous last words out of Wells Fargo if they're wrong on that. But it's good to keep in mind that once we get past the month of August, that a certain cohort in the United States is going to, on aggregate, have less money to spend for themselves. However, in the larger aggregate of the entire United States, it's not going to move the needle too much. According to Wells Fargo right now, they may have to update their view as we get maybe into September, as we get closer and closer to August. Or maybe we'll find some outlooks from other institutions that have different views and see why they think differently. But for now, this is the first thing that I got regarding this for this week. And as we go into the next couple of months, July, August, and September, we'll be getting more research on exactly this topic and how it'll impact the fourth quarter, overall fourth quarter consumer spending. Okie doke. Now we can get into the charts. Oh boy, the charts. So, looks like the dollar is continuing the fall. Yeah, right about now, you'd want this thing to hop back higher going into the end of day. Otherwise, you're dealing potentially with a move somewhere down here, another 17 points. So either your lows are roughly coming here, just above this S0.5 daily pivot on the DXY. Or once you cross down, it's a guessing game where you're going to bottom out here between S0.5 and S1. And if you go past this S1 pivot, it is tail risky. You start getting into some thin odds spread out over a wide price range. Alrighty, let's check out crude. Crude is bouncing. You can see it hit its likely bottom. Buying around this area right here made sense, just above the 69 handle. And there were some good dips on that. See how it didn't, your threshold's like somewhere around here. Call it like 68.50. And our low was 68.71. So about 20 cents off from having more tail risk lows. But it looks like oil is got a rebound going. And I would not be surprised if it retested 70 later on here in the day. It looks like the NASDAQ is doing A-okay. Probably some room to move lower, probably some room to move higher. Depends on the volatility expectations, although equity volatility has been contracting. So with volatility contracting in equities markets, the expected value range for how high or how low equities are anticipated to go is quite small. So maybe this could be the low of the day for all we know, based off that expectation. And let's go ahead and bring up Bitcoin in this top right one. How is Bitcoin looking? Well, it fell over the prior trading day quite significantly. Yeah, let's go ahead, switch over to a 1 hour. Wow, check that out. Thing went straight to S1.5. It doesn't do that all too frequently. Yeah. And you either bottomed out right here, or once you started going past, it looks like 29.9. If you were starting to go past 29.9, you're starting to deal with tail risk stuff. So looks like we caught it here. And there's probably a little more upside to like 30.6k. A little more upside to 30.6k is definitely in the cards on Bitcoin today. Ooh, looks like dollar is fallen here. Ooh, check this out. Let's go over to Euro USD. And check that out. I don't know if you guys can see that or not. Oop, accidentally hit the indicator. How much you want to bet that we top out around here for the day? I think if I could, real quick, I gotta maybe refresh this data here on the indicator. Got that old visual bug. Let's have to look back to 5,000, please. Yeah, I had an expectation that we would fall a bit more going into this day ahead. Let's see, do we have any news out of Financial Juice? German IFO expectations. Whoa. German IFO came in horrid. So yeah, you can see we dumped right here off the bad IFO information. So I wonder what's going on right now that could be causing this, because as far as the macro data goes, let's see here. Germany defense minister. The precondition for deployment of German brigade is that we require infrastructure in place. They're ready to deploy, the German defense minister, a brigade to Lithuania. So, but that was here at 2 o'clock. So, I don't know. Let's see here. Italy, France, and Germany are to have more trilateral ministerial meetings to strengthen cooperation on strategic issues at a European level, quotes a joint statement. So I wonder what this bounce here is all about. That does seem a bit off. Why would we be bouncing on bad macro data? I don't know, maybe it's because the yield spreads are turning more neutral here. I think now is a good time to take requests. So if anybody would like me to go ahead and check out a chart, go ahead and ask me to check one or two out. But man, yeah, this looks like it's probably the low for the day here on the NQ. When you bring it up on a 1 hour, you see how you get this peak for your low. Ooh, yeah. Let's try loading more data, see if that fixes that graphical bug. Yep, fixed. Yeah, your high could be in for the day if you're super conservative, but let's look at closing odds here on the NQ. Yeah, somewhere around here will probably end. That's where we're most likely going to end the day, somewhere around this S0.5 to central pivot area. So effectively the full range of the day has likely completed. Alright. Yeah, I got the. Alright. Bond rally as economic threat strikes risk appetite. Okay. So, some more financial juice stuff here. Let's see. So, we're looking at Euro stocks now. Let's go over to the Euro stocks real quick. Pound New Zealand. All right. I'll take a look at Pound New Zealand after this Euro stocks. Hmm. Okay, we got a rebound here off Euro stocks. We'll probably end up closing above the daily central pivot. Yeah, I'd assume that we'd close the day green somewhere up here. That makes sense to me. Yeah, we're probably going to go to that R 0.5 daily pivot, at least to the upside. And we more than likely already reached the low for the day. Let's go ahead and check out that Pound New Zealand. All right. The intraday yield spreads are getting more neutral, but we likely bottomed out for the day. See how you either get most of your lows for the day right around here between central pivot and S0.5, or you get your lows somewhere in the vicinity here of S1. Well, if we continue to make new lows, you're dealing with tail risk situations, and that becomes more unpredictable as to where your low for the day actually comes in. So if you're going to continue to be a bear, there's no super clear target to the downside other than saying this S1.5, S2 on the daily. But if you're a bull, right about now is where, you know, there could be some trading opportunities. And to the upside, I wouldn't be surprised if the top for the day was in based off these odds. So yeah, I'd be careful getting short here until you make new lows. Let's see here. Dollar CAD. I know a few people now who are continuing to go long the dollar Canadian. But because we've been looking at the DXY chart so far, we know that the DXY has been getting substantially weaker over effectively the last 5 or so minutes. But when I look at these charts, when I look at these distributions and these probabilities, I'm saying, if we are going to see dollar strength at some point in the day, we would need to see it come in right now. So let's see. Yeah, check that out. It's another bimodal distribution here on your low side, where either you get your low closer here towards the open, or you're getting your low closer here towards the S1 pivot. Now, I'd say once you go past the price of, we can just say 130.13, you're starting to deal with a threshold of going past, because you see how these colors go from super bright green to a duller green to a really dull green. Well, that works in relationship with the probabilities on these on the right hand side here. So when you have a large amount of probabilities, the histogram gives you a big peak and it gives you a nice bright color. And as the probabilities decrease and go down, the color goes more and more transparent. And you can see these are very thin, falling knife like odds. So once you go past it's very easy to identify the thresholds with this indicator because all you got to see is where do the colors go from bright to dull. And that's roughly around here at 131.3. This would roughly be the threshold level based off this distribution for where if you go past here, it becomes very hard to determine where the low for the day actually is going to end up. You're effectively guessing. Yeah. So again, either the lows already in or coming in now, and this is just some sort of mispricing coming in or whatever. It'd be helpful to know exactly what's up, what's moving these things here. Oh, China apparently says they're willing to push trade developments with New Zealand. Let's go ahead and go back to that pound of New Zealand. Maybe it's falling. I mean, we knew it was falling, but I'm wondering, did it start falling over here when the news came out? Yeah, as I scroll down the chart history, or okay, this was at 3, so this is like right at midnight over here. So on this candle right here was the news when China made a public statement saying that they're willing to push more trade for New Zealand. And New Zealand got nice and strong. Very nice. Very nice. And that was 100 pips on the day. Freaking fantastic. However, it does look like net across the board on all of the pound pairs. They're all down. And it looks like it's probably because the shorter end of the yield spread is particularly bad right now. So if I go here, yeah, you can see very short term movements are creating some negative yield spread right now. We still net over the long term, over the last 25 trading days, have made a lot of very positive progress because of that 50 basis point rate hike from the Bank of England. So that's why you see these big green cubes here. But short term, over the last 2 to 7 trading days, it doesn't look like we've made super positive progress on the yields here for New Zealand. So let's see here. Let's go back maybe to dollar CAD. Check out the yields on that for the day. Let's see if the yield spreads are improving here. And yeah, I actually would say that they are. Don't get me wrong. When you look at this chart, this is you should be having a bearish interpretation. Right? This is clearly all very, very red here in the box to the bottom right. That tells you the exact yield spread values of these boxes here. However, note this first column has a lot of green in it. And that green is actually fairly sizable. What this first column here is saying is that over the last 2 trading days, yield spreads across pretty much every duration, except for the 1 year and 20-year duration, have been improving in favor of the US dollar against the Canadian dollar. And yield spreads have been a known leading indicator of FX prices for, well, at least it's been a documented known leading indicator of FX prices for the last 30, 40 years. Good stuff. Alrighty. Well, I think that's pretty much everything I wanted to cover. I don't see any crazy news coming out here, but I am still fairly confused about the dollar weakness going into today when I'm not really seeing anything that's super dollar bearish coming through here on the squawk. In fact, counterintuitively, I'm seeing things that are dollar bullish because those German IFO surveys were especially bearish. I mean, just listen to this. German IFO economists. Storm clouds are forming for the German economy. Like, weak demand for industry and order backlog is declining. Industry export expectations are noticeably down, and global rate hikes dampen demand. Does that sound good to you? I mean, we fell on the release of that news. So I'm wondering what has induced the market to see a rebound. Wow. Tesla shares are down 2.1% pre-market after Goldman Sachs downgrades Tesla to a neutral bias. Yeah, you could see this orange line here. This is pre-market. Yeah, wow. It was down a lot more. Let's see here. Settings. Is there For a sec I thought I could get pre-market data to display. I think it's this, right? Yep, there we go. That's what I want. So this is pre-market, aftermarket, and this is pre-market. So this is on the Goldman Sachs neutral rating. Yeah, and this indicator is still basing itself off of yesterday's prices. So I'll have to make an update for it. So then it will adjust itself for pre-market. And then I'll have an extra setting in there so then you can do it for market open, right? All that good stuff. Oh, hey Meta. Nice to see you in there. A run, James. Nice to see everyone still kicking around here. I'm not getting any more news here, really down the squawk. But yeah, sad day with the loss of Mr. Markowitz. And I'm probably gonna read some of his work. I was already, I'm going through this book and I'm going through a lot of other things that Markowitz covered. And look, Tesla's already, fully rebounded from the drop. Tesla, it's got a lot of strength. It's got a lot of gumption. But yeah, lot of people for many decades to come are going to be touched by Markowitz and his contributions to finance and mathematics. Man, I don't know what else I can really say or cover here on the charts. I could go over dollar maybe one more time. It's falling, and it's continuing to fall. And we still don't know exactly why. Man, you'd think with all the doom and gloom from every single outlook that I post in the Discord, and after this show is over, guys, I'll be in the Discord. So that's probably something I should make sure I tell you guys, right? Like, I'm going to be in the Discord after this stream is over. And I'll probably be trading in there for about a good hour. Yeah, I think now it's probably it's gonna probably be a short day today. Because I'm like either gonna wait for this thing to reverse, or if it continues falling, well then that'd be newsworthy. But I don't have that sort of expectation for this thing to fall super significantly on no bearish US dollar news. And I don't necessarily think this is going to be a front run for tomorrow. Although we are getting a lot of, like, we're getting US Red Book tomorrow. That could be a big thing. But we're mostly getting foreign data tomorrow. So I'm like, if anything, there should be a front run for dollar strength going into tomorrow. So I'm like, what the hell? Alrighty, you guys. I'll go ahead and get it off here. I'll go ahead and keep an eye on these markets here in the Discord. I'll be in the trading room here on the Discord. Links to that is in the description. And I'll see you guys tomorrow, same time, 7:30 Eastern, 4:30 Pacific, for tomorrow's daily plan, where we'll have a more action-packed stream. We'll have a lot more macro data to cover. We'll have a new set of daily range probabilities to cover. I've been your boss, Joe Boss, Land the Prophet, and I'll see you guys in a bit.